The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 7th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there is off to a great start of their day. Let's make sure that you and I, that we do all that we can do to have a terrific Tuesday. And we should always remember that each of us has 6 basic needs, not merely desires, but instead needs that underlie and motivate each and every choice that we make. And this is especially important to understand when it comes to trading and investing. You see, our 6 needs are certainty, uncertainty, significance, love and connection, growth, and contribution. Those are our 6 needs. So the question is, which needs do you value the most? Figure out your top 2 needs, folks, and you'll understand the decisions that you make in life. Think about it like this. If a person needs to feel safe or wants to avoid pain or wants to feel comfort, what need is dominant? Look, this is really important when it comes to trading and investing. Is it their need to feel significant? Nah. Significance is about feeling important. Is it their need for love and connection? No. Love and connection, that's about togetherness. Like you and I here at TFNN. It's about unity. Is it their need for uncertainty? Absolutely not. Uncertainty is all about change. It's all about suspense and surprise. And therefore, a person who needs to feel safe or wants to avoid pain or wants to feel comfortable, well, that's a person who has a dominant need for certainty. And if that's your dominant need, please use stops out there. Look, everybody should use stops. But if you want to have any certainty when it comes to trading and investing, you've got to use stops. And one thing that I can be certain of, and that is I'm going to give you the best that I've got during the next 3,600 seconds out there. I'm going to share with you extraordinary tools for trading and investing. Our show, it's interactive. That means I'd love to hear from you. I am certain that I would love to hear from you. You can give me a call at 877-927-6648. Internationally, you can reach out by giving me a call at 727-445-1044. Together, you and I, we can go hunting for bulls and bears. It is Terrific Tuesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow trading up 103 points. She's trading out at 16,888. S&P down 11, traded 1954. Composite up 27 points at 4426. Russell 2000 down 6 points at 1088. The DAX off 78. The FTSE down 50. Goldilocks up $2. Silver down 2 pennies. Platinum up $13 out here. Moving to the upside, Green Mountain Coffee Roasters up 5%, up $7. CF Industries up $6. Up 2%. CalAmp up 17. Baidu up up $3, up 1.3%. GoPro continuing to go along for the ride. Tesoro Corp up 2 6/10%, up $1.66. Silicon Motion Technologies up 5%, up $1.25. Leading the charge to the downside, it is Google off $7. You've got SodaStream down $6. Cummins Inc. off 5. Biogen BIIB down 4. The Container Store getting ripped apart here, down 4% off down $4 off 20%. Regeneron Pharmaceuticals off about $3, down 0.7%. United Rentals down 3%, off $3. Again, our call number 877-927-6648. We're seeing a little bit of a bounce here in the market. Hey, if we go take a look at one of our cool tools out here, let's go take a look at what took place here on the 10-minute chart. Pretty easy trade set up out here. If we take a look at the 10-minute chart of the ES Mini, well, you can see if we start off here at about 11 o'clock last night, and we start counting our peaks and troughs out here as the ES Mini got down at 950, got down to a low out there. Oh, I got to do something here. If it got down to the low out here at 1939.75, that was your trough G out there. So we'll see what kind of counter trend rally can be mounted here by the S&P futures. Key level of resistance is going to be 1954. You're traded 1947.50 as we speak right now. Of course, we know that we were looking at the 30-minute chart. If you were listening in on the last show out here, I just went to the 10-minute because the 10-minute chart was giving us a signal that the 30-minute chart was also signaling to us, but we're taking a look at turns. Remember, if you didn't catch the first hour, you should go back and listen to the archive on Channel 9 because I went through the S&P and we took a look at it by starting with the longer-term cycle first. We looked at the monthly, then the weekly, then the daily, and we brought that down into the S&P futures. Of course, my system sort of crashed on the side, so it's been very frustrating for me, and so I got a number of charts here that are coming back up. It looks like I'm not going to be able to work on all that till after the show out here, but what I can do is I can put this chart up on the screen. We were taking a look at how inside the S&P futures, as it was moving down here and forming that fourth trough count on the way down here, it was doing it, as we pointed out, with less relative weakness out there. That's not what you want to see. If you are a bear, it's what you want to see if you're a bull out there or if you're just simply looking for a trade. This shows on the 30-minute chart out here that its resistance level, a new market profile that started during the last 30 minutes out here, is at the 1950. I'll fall back to the other profile, which is at the 1952. In fact, I'll really take a look at the profile on that 10-minute chart, and that should really be a resistance level. We'll see if, in fact, price can get above that. Now, with regard to reversal signals on this 30-minute chart out here, which it does not end until 10:30, so we got 18 minutes. Anything can happen, but you are potentially getting a bullish engulfing candle that would confirm that pattern inside of the marketplace. So you've had the 4 moves down, oftentimes where you can't see reversal. You can see the ES mini move down with less relative weakness. You need a bullish engulfing candle and then a bit of follow through on the next session out there, and then that would suggest some type of at least intermediate term bottom, perhaps longer, because on the 30-minute chart, what this formed was a Gartley buy pattern. We just got to wait to see how it plays out. And the buy pattern that I'm referring to, I'll go ahead and I'll put that chart back up on my screen here. Let me do this. Let me first get this. Oh, I guess I didn't really need to do that. A little bit of housekeeping out here just for a moment. There we go. Okay, let's switch back here. And here was that 30-minute chart. What we looked at here was the retracement from the low here on October 2nd. That low at 19.18 and a quarter, all the way to the high that was put out here yesterday morning at about 10 a.m. What we can see here thus far is price has made its way down to the 0.618 retracement level, 19.38. We'll see if that holds. We'll see what kind of candle forms here as we come into the 10:30 hour. Let's see. Let's go take a look at other things that are moving in the market. Let's go take a look at the ETF structures out here. Let's do that. Let's go see what we've got going on. Let's take a look at the IWM first, down 59 cents, trading out at 108.12. Come on, IWM, click up on my screen out here. What do we know about the IWM? Well, it looks like we've seen another test of that consolidation low here this morning, or very close to it. That consolidation low being around the 107.44 mark. That is the hammer candle from May the 15th. 75 million shares down there. Maybe today is the test of that area on light volume. 7 million shares so far in 45 minutes of trading. That says to me, no, not really light volume, but a lot of time left in the trading session. We'll see how that works out. The IWM has not been able to bust out these lows on a daily, on a weekly, on a monthly. Of course, we are at October the 7th. If we switch over, we take a look at the monthly chart out here just to give you an idea of what the weakest indice or index ETF is communicating to us. If you look at the where the consolidation began, that was back in November of 2013, we'll see there was a nice big low that was put in on May the 1st. There was 1 billion shares down there, and last month there was only 775 million shares. Now, this is a monthly chart. This is odd. Why is it showing me October? We tested it. Oh, I guess it was this month, though. Well, last month, as we were pushing down there, only 775 million shares out there. This month, obviously, we're far across. So now I got to switch over to the daily. My apologies there. I thought we tested it last month, but I was wrong about that. But on the weekly chart, we'll get the idea out here. If we take a look at the weekly chart, you take a look at the week ended May 12th out here, 320 million shares, and that was tested with 290. So it was tested on lighter volume. The week of February 3rd, that had 315 million shares. Again, last week's test on lighter volume. The daily, not the case out there. The daily did test that area with a heavier volume. That's why I was throwing out the idea, hey, maybe today will be a test of that area on light volume. Until that consolidation gets broken, it just says price wants to travel with inside the consolidation box up here. Its next move should be the top of the consolidation level, 120.58 or so. If, on the other hand, things really go to heck in a handbasket out here, what you can expect from the IWM would be another 13-point move to the downside. That would be a measured move of that consolidation. That would take you into the, 90, let's see, 104. That would take you to about the 94 level. And that is inside the IWM. Let's go take a look at the SPY out here. You've got the SPY off of $1.11, trading out at 195.18. The SPYs here made a low. What kind of volume was on this swing point low from October the 2nd? 157 million shares so far today. You're down with 27 million shares. Pretty decent volume for the first 45 minutes of trading out here. So it could be pushing that low. If, on the other hand, we see a close today above 195.06 with less than 157 million shares, guess what? You will have tested a swing point low with light volume out there. So the number to be watching for inside of this SPY is going to be 195.06. You close inside that, that says you can easily go back and test the low from October the 2nd out there. You reject it on lighter volume, says the work to the downside is over, says that it forms the C point of an A to B equals CD to the upside. That's what's going on inside of the SPY. Let's go take a look at Lucy in the sky with diamonds. The DIA right now trade out at 168.43. She too is testing that October 2nd swing point. That's got 9 million shares so far today. You've done 1.3 million shares. The level to be watching inside of the diamonds, that's going to be 168.27. If you reject that area, meaning you close above it, you do it with lighter volume, meaning less than 9 million shares, then the diamonds will have rejected a swing point with lighter volume. Just put all of that in context with regard to what we are seeing inside of the IWM out there, because this could be the day that really marks the Stevie bottom. It's not really my bottom, but I have been looking for a significant bottom to form in the market, the kind of significant bottom that takes us up into the beginning of the year. Yes, 2015 is what it is that I'm talking about out there. Let's go take a look at the QQQ ETF. We've got questions. We've got answers. If we take a look at the Qs out here, we're taking a look at that swing point of October the 2nd. The high there is 97.51. You're trading below that right now. That's going to be the key level to be watching. Volume there was 54 million shares. So far today, you've done 10 million shares out there, so pretty decent volume on the way down. Doesn't look like this will be a test with lighter volume, but one never knows. If you do see a close above 97.51 with less than 54 million shares out there, then it will have given you a test of a swing point low with light volume. If we do take a look at the Qs out here and we take a look at retracements from the low, that's the August 7th time frame to the high out here on the trading session of September 19th. What we will notice is we have done, or it has done, 8.786 retracement level. That low then on Thursday could be the C of an A to B equals CD to the upside. This is Steve Rhodes. This is TFNN. We got the Dow down 110. S&P's off at 11. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the show, folks. Dow off 116, S&P down 12 points. Had a request to go take a look at Twitter. Ticker symbol is TWTR. I believe the individual is long and strong. So if we take a look at Twitter, try to get some idea of where price may be headed to. The first thing we're going to look at is the A to B equals CD pattern out here. Now, the A point that we're going to use for Twitter, well, I was going to use it. Let me actually get the tool. On my screen, it would make it a whole lot easier for me to do an evaluation and give you an idea. So let's take a look at the A to B equals CD pattern inside of Twitter. Your A point is going to be the low from May 7th. That's going to be your A point. The B point I'm going to use on this A to B equals CD is the July 1st high. And my C point looks like the retracement looks like it made a low on July 18th. Now, if we take a look at that B point out here from July 1st, 42.95 is the number. And the volume out there was 36 million shares. Now, you want to see a B point taken out with the volume, wide price spread, accelerated volume? Well, that is what Twitter did. It did it on the trading session here of July 30th. 116 million shares took out 36 million shares. Yeah, I'd say that is being taken out with volume. Then what do we see here? Right now we are at the level of the 1 to 1.272 A to B equals CD. Price hits the 1 to 1 area. We don't see any kind of reversal signal until the trading session. Let me just blow this up a bit for you, make it a little bit easier. We'll blow it up. We'll pull it down. will do everything, move it all around. How about that? Okay, we take a look at this trading session right here, September the 3rd. September the 3rd gave you a little key reversal session out there, and then the price found support at its TAS market profile. You got to love how it did that. It also was really at the top of that high volume trading session on July 30th, and that was more important. And that was at a level of $48 even Steven out there. Again, 116 million shares. Price pulled back. It tested that level on September 5th, and then it went up to the next level out here. Another little bit of a key reversal type bear sash candle really that formed out here on September 25th. Nonetheless, price pulled back into the bottom of its market profile again, and it rejected that area. Where is price headed to next? Inside of Twitter, TWTR, and it's pretty nice and strong on a day that is weak in the market overall. Looks like Twitter headed up to the 57.70 mark. That's your 1 to 1.618 A to B equals CD. Now, there's some damage that was done on the left-hand side of this chart here. So let's take a look at Twitter. Let's get rid of the A to B equals CD pattern. So that's the initial, and I don't recall who asked about Twitter in the Tiger's Den, but that's the initial take on it. Let's find out some additional areas that you have to be cautious of inside of Twitter. And that's going to be this little downdraft session that occurred on the trading day of February 6th, 64 million shares to the downside. As you get up to a price level of 64.80 or anywhere in between the price level of about where you're at now or the high of February 19th, 58.95, so between 58.95 and 64.80, you may want to go ahead and fasten your seatbelts. You could get a little bit of agitation. There could be a lot of folks that are up there that just simply want their moolah back. They want their money back. They bought it at 64.80. They wrote it down to that May 7th level, down in the $30 area, and they're just saying, please just give me my money back because they didn't use any kind of a stop out there. That is the only certainty that we have in trading. We've got to use stops. We can poke around. We can take trades when they look like there is something that sets up and just simply use a stop. You set it, and then you don't really forget it. You go back and you adjust your stops along the way if need be. So 64.80 is likely going to be an area where, in fact, you may run into resistance. Not may, you should run into resistance inside of Twitter because of that supply line out there. Hey, let's go take a look at some of these equities here that are moving this morning. Specifically, I'm going to take a look at the ExxonMobil and Apple. You got ExxonMobil, which is one of the number one weightings or so, one of the top 5 weightings inside the S&P 500. We took a look at ExxonMobil yesterday and noticed that it had formed a bottoming pattern out there. In fact, it may have been the weekly chart. Let me see if it was the weekly chart. I thought we had a hammer candle. We do have a hammer candle on the weekly chart here for ExxonMobil, and that was after completing an A to B equals CD to the downside out here. So if you get some additional follow through this week, that means this week, it's early in the week, but it closed above 94.71. You'd have a confirmation of that hammer candle down there. And what we also know is that the February 3rd low was tested and rejected with light volume. Now that is 92.31 is the high from the week ended February 3rd. Volume there was 80 million shares, and last week's test with a hammer, 68 million shares. So the energy sector, it looks like it may be done to the downside. Of course, I say that because of the weighting of ExxonMobil with inside of the XLE out there. So we get back, we'll take a look at the sectors with inside the S&P 500. But we'll go take a look at Apple as well. It's up 22 pennies out here, so it has not broken down. Of course, if it does break down, you can expect some pressure inside of the NDX 100. This is Steve Rhodes. This is TFNN. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow off 83, S&P down 7. So we were talking, I mentioned Apple before we went into the breakout here. Now Apple just really moving sideways until Apple breaks above the 100.70 mark out there. Then it starts to move into bearish or bullish territory out here. Of course, we know that inside Apple, just like the market here, the market trying to chop around and find a bottom. So it's kind of a messy bottom. And that's really what's going on really inside of Apple as well. Of course, we know on Apple had that wild ride on September the 9th out there. A lot of volume on that trading session, both pushing higher and pushing lower out there. That means confusion. So we're about to learn something here if Apple can bust through the 100.70 mark out there. Also had just a follow-up request to take a look at the Dow Diamonds. If we take a look at the Dow Diamonds, we had taken a look at it on a daily basis out there. I gave you the numbers to pay attention to for rejection of the swing point low today. If we look at the weekly chart out here, it has not moved into any kind of bearish patterns. If we utilize our market profiles, all that has occurred is a test of the low. The low profile out there is 168.19. We saw a test of that last week, a test of it this week as well. A close below that would then suggest, hey, you might as well go test the swing point low here from the weekend of August the 4th. Likewise, a close inside the price point of September 15th low at 169.55. You do that with volume. Now, that's got 35 million shares out there. The following week had 31 million shares, and last week was 36 million shares. So not a lot to read out here with regard to volume on weekly basis. However, if this week, which we've already done 7 million shares, if you were to close inside that swing point, do it with more than 35 million shares, that would suggest that from a weekly standpoint, you'd go up and test that September 15th high at the 173.32 mark out there. Now, quick check in on that 10-minute chart and the 30-minute chart that we looked at as we kick things off here. Here's the 10-minute chart. Gave us that nice seventh wave down on the utilizing the Chapman wave out there. So it made a long trade, an intra-session long trade, very easy with your stop just below that low. We said 1948 was going to be the first level of resistance. You're at 1949.75. This 10-minute time frame here is going to end at 10:40. So we get another 4 minutes. If you close above that, let's move over and take a look at the 30-minute time frame. Where was the 30-minute time frame as we went into the very last segment, the very last few moments of the show of the first hour out here, where we said, hey, look at this. We see price moving down with less relative weakness out there. Of course, that gave us our fourth wave down. We did get a bullish engulfing candle that did take place as we closed out that 10:30 time frame. Right now, we're seeing a bit of follow through to the upside. The ES Mini on a 30-minute basis needs to get its mark above its market profile, the 1950 level. 1950 would be one area. I'd have to say 1953, 1954 is the number. Of course, the real number to be watching is 1966.50. If you see the ES Mini get above that, I would say if you're long, you're wrong, not because it's a hammer candle, but because you will have blown through a significant level of resistance out there. So that's what's going on the shorter-term time frame charts. Let's go take a look at, we didn't look at any currency pairs here yet this morning, so let's go do that. How about the euro? The euro trying to stage a big comeback here yesterday. Let's go take a look at it as we speak right now. Well, come on. There we go. The euro giving you a nice big piercing candle, almost a bullish engulfing candle, but not so fast. Now, what do we know about the euro? The euro has been making lower lows with less relative weakness out here. It had a nice little piercing candle. If we see some follow through today to the upside, that would really confirm it. Any close above the session from October 3rd, that open being 1.26693, that would then signal to me we are seeing a reversal inside the euro taking place out here. And what would that do? And that's at a 0.786 retracement on the larger pattern on the weekly chart. Right now I've got a daily chart on my screen. That number was at the 1.246 level. Never got down there. You got down to 1.25 even, Stephen, out here. We'll see if the euro is able to get a little bit of follow-through action to the upside out here. Of course, the euro, the heaviest weighting inside of the U.S. dollar index. You start in the euro. Look, folks, just a dead cat bounce counter-trend rally on the euro is going to knock the U.S. dollar index off of its mantle out there, and it'll knock it down in a big way, a muy grande way. And I'm not talking your Starbucks coffee out there. I'm talking about your bounce inside of the metals marketplace out there. That'd be silver. That'd be gold. That would be platinum. It may even be light sweet crude, although, excuse me, I saw somebody posting some things in the den about Putin and the ruble and oil out there. And I do believe that he has been teamed up on. And we've seen the benefit of it with lower oil prices out there. So that's kind of a weapon of some kind of destruction out there, and maybe best to just stay away from oil, but not in the case of the metals out there. So we looked at the euro. Let's go take a look at the Japanese yen. Another thing that would put some strength inside of the the weakness inside of the U.S. dollar would be the Japanese yen pulling back out here. So far this morning, it's pulling back. It completed a 1 to 2A to B equals CD. Gave us a bearish reversal signal. Gave us a key reversal session on October the 1st out here. That key reversal session area was tested. It was rejected. A nice little pullback inside of the Japanese yen. That dead cat bounce, a 0.61A retracement level. Any of those would put some nice weakness inside of the U.S. dollar index. So now you got the yen teaming up with its sister, the euro out there, and that will put some weakness inside of the U.S. dollar index. If we go take a look at the Great British Pound, we know that this has been trying to form a bottom out here. Of course, it failed, but I do believe it made a 1.272 expansion as it failed. Let's go see if that's the case or if I am mistaken out here. And no, I'm not mistaken. It made that 1.272 expansion. We haven't really seen much yet in the way of any kind of staged real reversal. It does look like a piercing candle yesterday, much like the euro. It needs to close above the open from October the 3rd, and that's at 1.6149. in order to suggest that it, too, may be done to the downside out here. The euro has, the Great British Pound is threatening to form a huge A to B equals CD to the downside out there. And that is what's going on in the three primary currency pairs out there. Let's go take a look at, sectors. I mentioned that we would go take a look at sectors out here. Let's go check in on the VIX index here first. The VIX index trading out at 1614. Of course, we know it's always dangerous when the VIX trades above its 50-day exponential moving average. That's priced out at 1377 as we speak. So, it's the question is, has it made a top out there? I don't know the answer to that. But I do believe what we are seeing that is clearly forming out here is a nice, unfortunately, it's a nice choppy bottom inside of the markets, just setting up that huge Santa Claus rally. Now let's go take a look at the sectors inside of the S&P 500. Let's go see what they are doing. Most specifically, let's go look at the numero uno sector, the XLK. Let's see what it's doing. Down 14 cents as we speak right now as we wait for this to be populated. Let's take a look at a daily chart here. I had the weekly that popped up on my screen. So what is the XLK doing? XLK here testing its swing point from October the 2nd. So it looks like that October 2nd level is really going to be a key area. That had 13 million shares. This has only done 1.8 million shares in the first hour. I say only. If I multiply that times 6, that is going to give you 6 at 4, 7, 4. It's going to be light. Very light volume inside of the technology sector. So the number one weighting structure inside the S&P 500, if it is able to close today above 39.40, you're at 39.45 right now, and this volume pace here keeps up, and it probably gets lighter, not heavier, then what you will have in the number one sector inside the S&P 500 is a rejection of a swing point low out there, and that says, okay, time to move it on up. However, you can see still a choppy bottom that forms over the next several days. I don't know how long, but we'll take a look. We won't know till tomorrow, obviously, or tonight at the close. If the XLK does close above that level again, 39.40, number one weighting structure, looks like it doesn't have enough volume here today to try to bust out those lows. The work to the downside, in fact, may be over. Let's take a look at the XLF. That's off 11 cents here this morning. She's trading out and also is testing the October 2nd low. That's got 56 million shares down there so far today, 10 million shares. So the financial sector, a little bit too much volume as we speak right now. If we just did the straight line math on it, it looks like it would be about the same volume out there, maybe even a tad more. However, if it does reject 2304, does it with less than 56 million shares, you'd have another rejection of a swing point with light volume out there. Let's look at the number one strong, I don't know if it's number one strong, but it is one of the strong indices inside of the S&P 500. That is the healthcare sector, the XLV. Trading down by 51 cents this morning. What has it done? Has it been able to get down and test October 2nd's high? 63.39 is the magic number. It's gotten down to 63.39. You got to love that. How about that? Johnny on the spot out here. Now, October 2nd at 7.2 million shares. You're down with a bit too much volume as we speak right now. Just a little outside. It's got 3.5 million shares as we speak. Nonetheless, the XLV has been such a strong dog out here. I'm not really going to worry about the fact that it has tested that swing point with a bit too much volume. But if it does crack, that would be that might be a lead indication to the downside. But at this stage here, I'm going to go with more of a consolidation pattern than anything else as we speak. Let's take a look. Well, we know the energy sector. We took a look at ExxonMobil, and ExxonMobil said no more, no mas. No more is it going down. We know that when we took a look at that weekly hammer. Hey, the XLE, what's it doing today? Looks like it's creating a bullish engulfing candle. So that would be interesting. So just like the weekly formed a bullish reversal signal last week, on the daily base, we're now starting to see the bulls try to come in and support that 1 to 1.618 A to B equals CD pattern to the downside. So the energy sector today, with a close above the trading session of yesterday's open, 88.62, you're at 88.89, you would have a bullish engulfing candle. In this case here, where it's trading at right now, it's engulfing the prior three sessions out there. That makes it relatively strong. So the weak link in the marketplace, which is the energy sector, well, one of the weak links inside the S&P, I should say, it is giving us some bullish action Jackson out there. Let's take a look at the consumer discretionary area, down 19 pennies as we speak, trading out at 66.40. Let's go see what it's doing. Almost a hammer candle on October 2nd. Close, but no cigar. However, that is being tested here this morning. With light volume, it looks like there's 7.5 million shares inside of the energy sector. So far, you've tested it with 1.2. My straight line math says, lighter volume is likely the case out here. So you will have tested a swing point with light volume inside the consumer discretionary area. 66.39 is the TAS market profile low out there. That's on the consumer discretionary. Let's take a look at the consumer industrial sector out here, the XLI. What is it doing? It's trading inside its October 2nd swing point. That has volume of 13 million shares, 2.5 million shares so far to the downside out here. What else has it done? Let's see. Here's the test inside. The August 6th swing point, 31 million shares. That test was tested and rejected on October the 2nd. Wow, way light on volume out there. I mean light. 31 million shares was August 6th, and October the 2nd, only 13 million shares. Not enough to be able to bust out those lows inside the industrials. Let's look at the consumer staples sector, up 3 pennies as we speak right now. What are the consumer staples doing? Strong like bull. How about this? You got the healthcare sector and the consumer staples sector. Of course, many might say, hey, consumer staples, that is a defensive play out here. Well, let me tell you about the defensive play. It's on the offensive out here. It's trading inside its swing point high, which was from September 16th. That's got 8.3 million shares. You were up into it yesterday with 7 million shares, 9 million shares on October the 3rd out there. This is going to trade up and test that high, that September 16th level, and that's at 45.73. So the staples are going to move up and maybe even take out those highs and set up a large A to B equals C to the upside. So far today, about 2 million shares out there. So that most certainly is not falling apart. How about the material sector? We might as well go ahead and finish this off out here and do a round robin. You've got the material sector out here, not looking as good, looking a little weaker than the other sectors. It's testing that October, so it's trading inside that October 2nd swing point, which has 9 million shares, but you're doing it with light volume today, 1.3 million shares. So looks like, as Lee Corso would like to say, not so fast. Not so fast to the downside out here. Of course, a lot of time left in the trading session. Hey, let's go finish this off. Let's take a look at the utilities sector out here. She's trading out at 42.61. Let's go see what it is doing. It completed a 1 to 1 A to B equals CD to the downside. Did that on September the 26th. Right now, just trading sideways, trading inside its consolidation box out here. 42.68 is its resistance level. If it can bust out of that, it ought to move higher. And that is a wrap for the S&P 500 sectors out there. Got any idea why Stevie believes the market is forming a significant bottom out here? If not, go listen to that first hour. Put it together with this last 10 minutes out there, and you'll get an idea. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 83 right now. S&P is down 7. Composite off 20. Russell down 4 points out there. I had a request to go take a look at the EEM, I believe. Let me go take a look. That's the Emerging Markets ETF share. ETF, that's the iShares out here. As we take a look at this, try to identify what it has got. It, too, formed a low here on October the 2nd, 92 million shares. Now, I have not traded this. I don't know what is really contained inside this ETF, and that makes it very dangerous. So my suggestion is anytime you got looks like, maybe you got some currency stuff that could be going on here in this emerging markets out here. So, any ETF that you trade, what you ought to do is go find the portfolio, see what's inside it, track the top 10, and that will help you to better trade this. But with regard to what it is doing right now, if we just simply use the tools that we do have at our access, I don't see any kind of bullish reversal signal other than this gap up that took place yesterday. But the problem is it's got so many gaps inside here. I give gaps. I don't even give gaps. I wouldn't give gaps even some consideration out here. I don't know, so that's not a reversal signal to be looking at. If I take a look at volume, because I don't know its pattern behavior, it made a low with 92 million shares. It came off of it with 61, and yesterday 84. So pretty decent volume yesterday out here. I would say on any kind of a bounce or any kind of a move higher, what you're going to pay attention to inside the EEM, you're going to look at the 42.46 level. That's where people ought to get off of that elevator. That is your 0.382 retracement. Once you're off there, then if it's in bullish mode, it ought to make a move up to the 43.76 area. That is your 0.618 retracement. And that is on the iShares Emerging Markets ETF. As we round out this next couple of minutes out here, let's take a look at gold. So you've got gold up $4 right now. Gold having given us that nice piercing candle yesterday. We're seeing some additional follow through to the upside. What you'd like to see, what I'd like to see, is a close today above 1213.90. That would be nice. That would be the kind of follow through that would suggest to me that gold is up off of the bottom. Of course, what we have to do, because of the directional correlation, and I do mean only directional correlation, that says that the U.S. dollar index needs to be off of its highs out here, and that means that the euro really does need to stage some type of rally, whether it be counter trend or otherwise. It does need to stage some kind of rally out there. So gold at this stage giving us the bullish signals. Silver right now is flat out here. Silver is in the process. It did form a nice bullish engulfing candle, which engulfed the prior two sessions. So that looks relatively bullish as well. It does look like with the bottom maybe inside of the metals. Not so fast inside of the light sweet crude complex out there. I believe when we took a look at that on a weekly basis, it looks like that wants lower price. It is testing a level of support at the 89.56 area. If in fact that breaks away, then you can expect some lower prices out there. Moving to the upside, let's just take a look at this one equity here. This is the leader to the upside here this morning, CF Industries. I don't see any reason what's behind the move out here, but let's just take a look at it. CF Industries has a swing point from October 1st, 1.3 million shares. You're up today with about 300,000 shares. So it looks like, math-wise, about the same volume, maybe a little bit lighter than its October 1st swing point. But if it can take it out, meaning to close above 281.95 with more than 1.3 million shares, you would have a to B equals C. They are merging with Norway Biz. Thanks so much for that, Z. Folks, stay tuned. Our man Basil Chapman, he'll be up next. It is Terrific Tuesday. That means we've got the option hour. Daryl Martin, David White, the Tom O'Brien Show from 3 to 5. Andy Hack, he will take it home from 5 to 6. Have a great Tuesday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.